You're listening to Questioning Your Sense, where you get real-world, pragmatic tax and financial advice for business owners, entrepreneurs, and independent contractors. Here are your hosts, Kevin Molen and Charles Steinmetz.
Hey folks, welcome to Questioning Your Sense. As usual, I'm your host, Kevin Molen, and our ever-present co-host, Charles Steinmetz, is with us. Charlie, how you doing this morning?
Hanging in there, good. Got a car in the shop, but it's life.
Oh gosh, that's never fun. So anything special you want to tell me about today?
Nothing extraordinary special. How about you? Anything on your mind?
I mean,
lately?
Literally on my mind? Sure. So I got glasses for the first time. I'm 35 years old, and so got some glasses. Testing them out still, but no big deal. Didn't have very poor eyesight before, and it's not significantly improved now, but it's fine. So no complaints. Okay, well, why don't we go ahead and jump into our subject matter today.
Sure.
So today's a little unique since we're going to be trying to speak outside of ourselves, but also within a job that we do. So
Sure.
the question that's posed today is, how do I pick a tax advisor? And so I think the tack that we're going to take here, and you tell me what you think about this, but I think the tack that we're going to take here is step outside of ourselves for a minute and think objectively about the things that that our audience ought to be looking for as far as a good tax advisor. And then once we've kind of gone through that list, I think we're going to let our biases come back. And we're going to talk about the areas where we think that we excel, and that because we know that we excel in those areas, we think that that's at least some of those are what people ought to be looking for.
As long as we acknowledge that there is some bias from our opinion as well, but there are some key things that should be based regardless of bias.
Yeah.
In our opinion, at least.
Yeah.
I like it. It works.
Okay, so you want to cover kind of the first point that we're talking about today as far as an unbiased view of what you ought to be looking for in a tax advisor?
I think an unbiased view of taxes, your tax return has got to be accurate. I think it's an important piece. You don't want to pay too much. You also, at the same time, don't want a bigger refund than you should, because you don't want them coming back on you with it.
Yeah, you're liable for them to come back, yeah.
Accuracy, I think, is definitely a valuable and desirable thing. At the same time, not to downplay accuracy at all, nobody's a perfect robot, right? Errors should not be prevalent,
right?
But at the same time, it should be at least a question you could ask. Hey, in the event, the unfortunate, unlikely event that there is a clerical error and it's done by the professional, what's their policy on that? Would they cover any extra interest or penalties? Don't expect them to pay your taxes.
Right.
But any extra interest or penalties would show that they value that accuracy, they care. If it's like, nah, it's a mistake and you get to pay it, it tells you.
Yeah, that's a great point. Yeah, because if they take responsibility for the mistake that they made, a keying error or something like that,
right.
Inverting numbers, something like that,
right.
It's possible. My first couple of years doing taxes, I had to make a few of those phone calls.
Sure.
So I'm going to inject our biases here for a moment, because within our processes, that didn't last very long.
No, it didn't.
But within our processes, we have checks and balances, right?
Sure.
So. And from a bias standpoint, you should look for people who are doing quality control checks, right? But that's we'll get into that a little bit later. But for our processes, once I sit down with my client, I meet with them, I do all the data entry. I at least the first couple of years where I really was still trying to figure out the best way for me to do this and find myself as a professional. During that period of time, it was do the best I could up front, and then really make everything as perfect as it could be on the back end.
Sure.
At the stage that I'm at now, after doing probably 8,000 tax returns, 7,000, 8,000 tax returns in my career, I get everything right usually in the very first appointment,
sure.
right?
Yeah.
But then those first couple of years, it was a lot of do it and then make sure it's perfect on the back end.
Right.
And so I had to make a bunch of phone calls to my clients of, hey, initially I told you this, but the reality is now this is the outcome, and now it's right. And those phone calls weren't particularly fun to make.
No.
But at the end of the day, most of the feedback I got from my clients is, I just want it to be right? Whether it's a good news or bad news, I just want it to be correct.
Yeah.
And so I didn't get too much flack from my clients. I assume you experienced something somewhat similar, or were you just absolutely a rock star year one?
I mean, not to toot my own horn, but no, absolutely. I mean, those phone calls is always, you know, at least in our process, speaking to our bias of, for those who may not know, we meet with the initial and then we give an estimate based on what the tax return looks like. And then we'll go back on the tail end and double, triple check all those numbers and stuff. And if I find that an 8 instead of a 6 or a 7 instead of 1 type of deal, it may change a number. If it's the last number and, you know, 16,207 or 16,201,
Not a big deal.
not a big deal.
Yeah.
You know, 76,000 or 16,000 was a big deal.
Yeah, absolutely.
No, the phone calls ended up happening, but same, not a lot of flack of just that, I want them to be accurate. So that's, I think, where our first point would come from is we feel it. We also felt it from those that we've worked with that is the underlying most important thing. I'd rather just be right.
Yeah, absolutely. So accuracy, right? I mean, I've seen tax returns, when people will come to see me for the first time, they will bring me a copy of their previously prepared return.
Sure.
And one of the things that we'll find is that their name was spelled wrong. Maybe it's a first name, because if it's the last name that's spelled wrong, there's some
The e-file should catch it.
Yeah, exactly. Some error catching from the IRS's standpoint. But, their name is spelled wrong, or it's the wrong middle initial, or, just weird quality control issues that I look at that. And invariably that person will say, yeah, I just had been with them for a long time. So I felt like I, not owed them, but because I don't think I've ever had a client tell me that,
Right.
but that they felt like they needed to stay with them, or they were comfortable, or there was some level of trust
it's too
there.
easy to just go back.
Yeah, exactly.
Yeah.
And so I see that kind of work, unfortunately, more often than you would expect in a government compliance industry,
Sure.
where you would expect things to be very accurate. So yeah, outside of our biases, number one, got to be accurate. If you're not accurate, you don't belong in this industry. You really, really don't. It's got to be right. So then from there, kind of our next point to cover is that we think that, again, outside of our biases, hiring a tax advisor that understands or has expertise in your specific situation or circumstances. So this one can be a little bit more nuanced, right? It's a little bit more difficult to pin down. But I'll try and illustrate kind of one point that I think may fit here. If someone who works in law enforcement, right, who we do a lot of law enforcement tax returns, somebody who works in law enforcement comes to see me and says, hey, Kevin, there's a grooming standard with my department. I have to have haircuts every so often. I pay this much for haircuts. Are they tax deductible? I know, because of our expertise, I know that the answer to that is no, right? They're not tax deductible. But
it's such a good argument.
It is. It's a great argument.
Yeah,
it's through their employer. It's required and everything, right? Whether they cut their hair themselves or they pay somebody. We've our crazy, absolutely crazy. One of our previous employees would cut his own hair. That was his deal. I cannot imagine cutting your own hair. Hunter, if you're hearing this, we miss you. He moved to Alabama, and he cut his own hair. Can you believe that? I can't imagine. How do you get that right?
So I'm going to interject from off screen.
Okay.
I've cut my own hair since I was 18 years old.
Oh my gosh, yeah. Our crazy producer, Clark, cuts his own hair. Okay, Clark.
I've done it since I was 20.
Oh, okay, so I'm in the minority.
You're the only schlub here. Rich boy, go pay.
Oh my gosh. Okay,
bought a razor one time.
You guys are insane. I don't know how you could possibly cut your own hair. Okay, setting that aside for the moment. That theory, it really is about having the context.
Mm-hmm.
And so I've had submarine pilots, I've had overseas workers, I've had, a whole lot of varying things.
Sure.
And when a submarine pilot comes to see me, I know very little about the nautical world in regards to tax and finance, right? And so, lacking that context, I just have to ask a lot of questions, to feel like I have any context. And when you hire a tax advisor that has expertise in your situation or circumstances, they already have that context, and so it's an easier transition.
Agreed.
I feel like you really can make it work if it's somebody else that you really connect with and feel like can trust and have a great referral from. If they don't have that expertise, but you got to work a lot harder as the client to make sure that you're getting every deduction that you want to qualify for.
So industry-based and deductions work and stuff, I think that's a valid point with that. But at the same time, there are industries or pieces of the tax code. Nobody can memorize the whole thing, folks. We'll be honest and frank. That's our next point, but not to too early, is there are pieces that just have extra layers of compliance or rules that if you're not familiar with, you're going to end up getting burned.
Excuse me.
So an example would be like foreign partners, foreign partnerships, or even other state tax returns. You may live in a state and have income or a property in a different state. That state requires filing. Great, we live in Texas. I love Texas, no state tax return. You go off and gamble in Louisiana, you got to file Louisiana tax return. Am I someone who is an expert at filing Louisiana tax returns?
Right.
That would be something that you'd want to look for is, do I accept that they're not an expert, or do I need an expert in this particular piece? Or like the foreign partners, something that you do on a regular basis, because there's weird rules and compliance and other extra paperwork that goes with that to the IRS that's got to be, number one, accurate. And so I think it's an important thing as far as those expertise for them.
Yeah, absolutely. Okay, and then beyond that, our kind of our third and final unbiased, right. Objective point that we'll call it is that this person needs to be honest.
Yeah.
Now, we're actually going to take a different spin on honest here.
Okay.
So everybody has heard somebody else say that everybody fibs on their taxes. Okay. I don't believe that that's true, simply because I do taxes for a lot of people that everything is as straightforward as it can be.
Sure.
But when you're looking for a tax advisor, you need somebody who is honest with you as an individual, right? Some people are looking for a tax advisor that every single law verbatim. Some people are looking for a tax advisor that adheres to the law, but that is also looking out for their best interest, which means using precedent and pushing the envelope as best they can. Some people are looking for a tax advisor who is going to find the shadiest loopholes they possibly can, do everything they can to push those boundaries and even cross them.
Right. If they don't ask about it, then it was fine.
Yeah. And so some people are looking for that shady tax advisor.
Right.
And that's not the kind of shop that we are. That's not the kind of person that I recommend that you go see, but that includes our bias. So what we're saying is, being unbiased, you need to look for an advisor that is honest with you, whether they're honest in regards to tax laws and that kind of stuff and what you're looking for. We can advise you on what we think you ought to look for, but what you're actually looking for is up to you, right? And so we're not going to say that you need an honest tax advisor. We're going to say that you need a tax advisor who is honest with you as an individual. So if they're stepping outside of the scope of the law, you want them to tell you that that's happening, so that you understand.
Knowledge for, exactly.
Yeah. Any thoughts on that?
No, I agree with that. At the same time, I think I have an alternate on the honest with you. So honest with you,
Yeah.
and that is absolutely great. But I think truly unbiased, you need someone who will be honest in a blunt way with you. So just need to be honest of, this is the problem. If let's say you owe $4,000 every single year, they need to be honest and just say, this is what needs to be changed. This is what's going on. You're under withholding here, or this is something that needs to. That's an integral piece to a good advisor, I think, in an unbiased way of just being honest and about the tax return and what's going on that, and that your comfort level meets it because you need to sign it. But at the same time, you got to be honest and just frank. This is how things are. It's your money.
Yeah.
It's your money.
Yeah, it's important. I mean, you and I both know I have a story about that. Do you think I should share that story?
Which one?
Which one? Are you serious? Okay. So being very straightforward with my client.
Oh yeah, no, I love that.
Do you
story.
think I should share? Okay.
I love that story.
All right.
You can do the story thing this time. I get to sit back.
This isn't even a soapbox. This really is just a story. Essentially, I had a couple who had come to see me for a long time. They've been with our firm for a really, really long time. And they came to see me, and probably for 4 years in a row, they consistently owed more and more each year. And they were very, very frustrated with the outcome. I had diagnosed the issues from year one and gave them the solution. And then in year 2, updated that solution because it was getting worse. And then in year 3, another update. And then in year 4, finally in year 4, after advising them for 4 years of these are the changes you need to make, and them really kind of taking it out on me as the advisor each year.
It's your fault that it's this way. Yeah.
Yeah. It's a challenging dynamic.
We record history, people. It already happened. I can't change it.
Right. And it's, I think, my job to advise my clients to make better decisions moving forward. The frustrating thing in this scenario is that's exactly what I was doing. And I was providing the necessary advice and encouraging them and educating them on what they could change in order to get the outcome that they were looking for, or at least something that was more acceptable than what was happening. I mean, they were owing 5-digit figures, and it was getting to the point where it was becoming wildly unmanageable. And finally, in that 4th year, I had reached kind of a boiling point of being frustrated in them just not willing to make the necessary adjustments. And so in this scenario, what I did is I printed the necessary information for them to implement in order to righten the ship, so to speak, and in very clear, very blunt language told them, I like you guys. I want to continue seeing you. However, if you do not implement these changes, these specific changes, and follow up with me within a month, I will not see you next year, right? I'll either have you see another tax advisor, or we'll separate service with the firm, because I give you great advice every year. You never follow it, and then we always end up right back here. And it's not even that we end up right back in the same spot. It is continually getting worse. Right. And so 2, 3, 4, 5, 6 years after that point, we're talking bankruptcy, horrible, awful outcomes all around. Right. And so I was very blunt, very straightforward, kind of like what you're talking about. And I'm not trying to be a bully with my clients or anything like that, but it kind of turned into that because I'm like, I'm done. I really care about the financial success of my clients, and they weren't going to succeed on the path that they were on. Right. And it pained me to see that frustration every year. Yeah. It wasn't necessarily a frustration that I had. It was a frustration that they had. Right. And every year they were worse off financially. And that's not the satisfaction that I get from my job, is seeing my clients get worse financially. The satisfaction I get from my job is watching my clients go from point A, wherever they currently are, and then helping them reach their financial goals to get to point B, and going in as straight a line as possible, which isn't necessarily always straight. And so in the scenario in which, continuing the story, basically, they came to see me the next year. They said, Kevin, they had followed up with me saying, Kevin, we implemented these changes. So then the following year they came to see me, and their feedback to me was, we didn't even notice, Kevin. It was so easy. It was so easy. It was no problem. It wasn't. It was a big change to their withholding. Sure. And it took a lot of money from their check. Yeah. And that just tells me what was happening with their finances at the time. Right. So for them, we noticed a change, but it was easy, Kevin. And that very next year they got a refund, right? And they just were the happiest ever. Yeah, over the moon, absolutely. And so that's one of those scenarios where I'm not going to use that type of technique often. In
Right.
fact, that's the only time I've ever used that strict of a technique.
Sure. Read the room.
Yeah.
However,
Nice. Yeah, absolutely. So okay, I think that wraps up that
That
the
is
honesty perspective, right?
Right. So the duality in that.
Okay.
So I think the next part is we're adding our bias in. So there are some things that we think are important. They're probably subjective in that. We don't think that they are, but we're going to try to do our best to give counterparts to.
Come on, Charlie. They are subjective, right? They are subjective, absolutely, because not everybody wants the same thing.
Correct.
So, just to give you some insight, Molen and Associates hires based on a certain set of core values. Many of our coworkers and much of our team share the same core values and the same moral values, the same vision. A lot of that is very similar across the board. And so Charlie and I will end up having very similar opinions. It also stems from the fact that he and I have been friends since we were very young.
Correct.
And continue to this day. And so we talk about this stuff all the time. So when we differ in opinion, Charlie and I in particular like to argue very passionately. It's super fun for both of us. And we both learn and grow based on that. So a lot of this, Charlie and I are going to be on the same page. And because we're on the same page, we also have to recognize that it is subjective.
There is another page.
Just
yes.
because you and I happen to agree that this is a truism doesn't mean that every single one of our listeners or everybody would agree that this is. So diving into this, the question that I really want to ask, and it really is a rhetorical question, is what do you want for your advisor? And people have to consider this for themselves, right? Because if what people are looking for is kind of, as I mentioned before, somebody who is shady, not asking a bunch of questions, trying to keep money off the books as much as possible, that kind of stuff, recommending that you have another set of books for your business and that kind of stuff. If somebody's recommending stuff like that, we think instantly, right, that's a bad tax advisor. But there may be people who are looking for that kind of advisor. Jumping into kind of the first point that we think, again, realizing that this is influenced by some of our bias. The first point is that your tax advisor meets the expectations that they set. I'm going to call you back on this day. I'm going to email you on this day. Your tax return will be done on this day. That kind of stuff.
Sure.
And then, of course, meeting expectations also includes filing deadlines, like April 15th, that they're supposed to have it filed by then, but then don't have their work done in time and have to extend the tax return.
For seemingly no reason. There could be
Right.
good reasons.
Right.
But for seemingly just hey, it's not done, we're filing an extension for you.
Yeah, which is a very foreign concept to us, right? So generally, we have a date, maybe 5 or 6 days before the deadline. And if you have all the information to us by that date, then we guarantee that it will be done by the deadline. And then we do whatever we have to do to make sure that it's done. I've never had to extend a tax return that I had all of the necessary data for by the deadline, just because I didn't get it done in time. There are people who get me the missing information the day before or the day of, but now that's past the deadline, and so we haven't set the expectation that it would be done by the deadline. And then sometimes we still get it done, or sometimes we have to extend it, right? So there's
setting their expectations, but meeting them. So setting them is important in the first place. So it's so you're talking more on the advisor meeting expectations, correct?
The advisor needs to be, basically when you're looking for an advisor, and your first contact with that advisor is, sure, let me work on this proposal and I'll get it to you in a couple of days or something like that.
Sure.
And then you don't hear from them for 2 weeks. That's probably not the person that you're looking for, right? Because if they can't meet those types of expectations, then what's going to happen down the road when they're very comfortable with you, right? And then they know you'll understand if they have to push something back another couple of weeks and that kind of stuff.
Without communication.
Right, yeah, absolutely.
Good. So on the expectations, I thought in our planning session beforehand, we talked about a different layer of expectations walking into it. And Do you want to take anything on that, or maybe we'll launch into it?
No, yeah, go for it.
So, one of the things in all of this, whether we show our bias or we think it's general, to me, a key thing is whether you're talking about investments, retirement, whatever this may be, looking for an advisor, it's difficult sometimes thinking in a professional capacity of advice to just blanket say these are the things that you need to do. Because the end goal, if your end goal is slightly off from my vision of your end goal, in the end, you're going to end up in a different place. And so having those expectations, knowing what it is you want walking into it is going to help you discover what are the things you need to find along the way. So does it matter to you this thing? Does it matter to you this thing?
Can you give a specific example?
So I think one of our points was transactional versus a consistent person versus a not transactional type process, right? Is it just am I looking for someone, I want a monkey to punch in numbers, right? Or am I looking for someone who will work with me and explain things to me and that I could build a relationship with and see on a regular basis? And so just some of those expectations. Does punctuality matter to me? I'll see you in February as long as everything is done by October. I don't care. Just get it done at some point. I mean, there are some expectations on there. So are those things important to you? Or is it just I want to hand something off and never hear from you until it's done type of deal? And so there's some expectations that someone can set of their own of what they're going to want to look for.
Yeah, finding the right fit and them communicating their process and the way that they produce the product. And, because I've got some people who, spoiler alert, in case you're not aware, I am a talker. It is that way in my appointments as well. And very few, but I have had a couple of people saying, Kevin, I don't care. I just want you to do my tax return. and then I kind of sit back and I'm like, okay, no problem. I can absolutely just crank it out and be a monkey and punch in numbers like you're saying, right? Sure. But that's just one of those scenarios in which where my skill set is, right, in educating and communication.
Right.
It feels like, well, then why'd you come and see me, right? I mean, right. I've got other advisors who could do this maybe for a little cheaper or something like that.
Right. Because
what you get when you come to see me is the years of experience, the expertise,
right.
the communication and education, and so yeah, it's finding the right fit.
You have a favorite phrase for this past number of years, at least that I've found, that I think is key in this, because it can go positive or negative on the piece. And since you didn't bring it up, I'm going to say your favorite thing, which is that frustration comes from unrealized expectations. So whether your expectations are met or vastly exceeded, frustration could happen. And that's where I think my point was, just having those expectations set in the first place, and then taking maybe some information from here to say, here's what I would want out of an advisor, because otherwise you're going to end up frustrated. Someone who's getting amazing service and education and a lot of detail in the tax return, and someone who just wants to go, for those who are just listening, putting your fingers in your ears and closing your eyes going, la, 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 tell me when it's done.
Oh, goodness. Stole my line. Okay, so that's kind of our first point in regards to what we think is subjective, right? In areas that we think are valuable and what you're looking for in a tax advisor. Hopefully you see some value in that. Beyond that, we've got availability, which can be said in a bunch of different ways. But ultimately, we think that rather than the H&R Block tax advisor who's not a tax advisor, in fact are just a tax return preparer, sure, right, and are not advising you throughout the year, not available for phone calls, that kind of stuff,
sure,
but instead we recommend that you're looking for someone that you have some level of contact with, because what's going to happen is, a very common phone call that I get, which maybe most people won't think about that it would be common, but it's very common. Probably 1 in every 15 or 20 phone calls I get is a client who had a relative die, usually a parent, and they're inheriting a home, right? And now they are trying to figure out what to do with this home.
Right.
Should I rent it? Should I sell it? A lot of times there are multiple owners, right? Because they are one of a couple of people who inherit, the home. And so there's a lot of complexities with that. But that's an incredibly common question that I get. And if you've got a tax advisor, and maybe it's just a firm that you use, and it's not one specific person that you're meeting with every year,
Sure.
but it's just the firm that you go to.
Sure.
Even that firm can be available to answer this question, right? Again, heavily biased opinion, but I think that you should be developing a relationship with a person, one person. And I'm stealing our thunder because that's going to be one of our points. But still, this person or firm ought to be available for you to be able to ask questions and do tax planning and be able to get some value outside of just the tax return preparation.
Sure.
Because meeting your government compliance requirement is certainly important.
Right.
But I think it's more complex than that, because the person who understands your tax situation is the person who needs to answer these types of questions
Sure.
about the tax implications of these decisions.
Agreed. And there's a point in life where one and done will work. I mean, you're 18 years old, or
Right.
just having that one job, and it's all just you. And do you truly need? I mean, you never know when bad things will happen to families or relatives, and that's not fun to think about. But is there a blanket? And that's why we have this into the section of technically subjective, and we have our bias. Is it required? Does everybody truly need that every year you have a tax return done for you? It's subjective, right? There's going to be your own expectations, and there's going to be what it is that you value out of it. But then there's, the insurance, as it were. I mean, people who have life insurance or car insurance or homeowners insurance, I hope I never have to use my homeowner's insurance, but one, I have to. But
I
two,
certainly have it. Yep.
I definitely have it as well.
Yeah, absolutely. And certainly from a value proposition standpoint,
Right.
We know that there's a tremendous amount of value. I mean, I can't tell you the amount of times that talking to my client before they make a decision has saved them $1,000 plus, right? I cannot even count the number of times that I've had those conversations, right? I mean, I've had conversations that it's saved my clients, $35,000.
Yeah.
And that phone call, that one phone call, saving them, $35,000 in the entire course of us working together. You probably won't pay our firm $35,000, right? And so that one phone call has now paid for a lifetime of professional service. And you never know when that's going to be your phone call, right? When it's a scenario in which I can save you a really tremendous amount of money, knowing beforehand.
Right.
The problem is with taxes is you come in after the year is over.
Correct.
After you've made a bunch of decisions. And so having someone that you have access to, first of all, you need access to someone, in our opinion. And secondly, you need to actually use that access.
Yes.
So that brings me to the grouping of people who call me after something has happened, or who just bring it up in the tax appointment.
Oh, by the way, I did this last year.
Mm-hmm.
Like I said earlier, guys, we're record history. If I'm doing your tax return from last year, it's set. There's nothing we can do to change 99% of the time what actually happened last year, right?
Yeah, the year's over.
Correct, the year is over.
Yeah.
But being available for, one, great, the year is over. Here's the things. We give the suggestions of things to change. Sometimes a one-time thing, inheriting a home is what it is. But I cannot tell you the amount of times that I have heard my friend here walking through the halls, talking to people, telling them the worst thing you can do is not call me during the year when there's this giant financial thing going on. And so the reason that we state that is not every time, probably less than half the time, but having access to at least additional information for your decision making during the year, that's a year that I can have impact and can advise you in a way that could save you on doing taxes. A really easy one is people who end up retiring, who have a big balloon at the end, and then they pull a bunch of money out of retirement, and you retired in October. So you had a full year's of wages, almost, and a balloon payment from your salary, and you pulled a bunch from retirement, and then you ended up turning on your pension. So
so they go from a 22% tax bracket
correct.
to a 35% tax bracket, and all they had to do was wait 2 months for January, take
Correct.
the distribution then, and they could
And
have
spread it
evened
out.
things out a lot more.
Correct.
Yeah.
So that's he knew exactly what I was talking about, and
Yep.
exactly.
Sorry,
what
didn't mean to steal your
No,
thunder.
that's totally fine.
I just we deal with this so often.
That's just an easy one to
Yeah.
point out of
Yep.
a during the year kind of, hey, here's this suggestion in this way. Do you have to? No, but it could have some tax changes. But
Yeah.
the availability, in our biased opinion, would be an important cog and right advisor.
Yeah, so I'm going to go on a rabbit trail real quick, right? It's a little side note, a little tangent. This is why I often recommend to my clients that the best time to retire is actually at the end of a year, before the year is over. See, once you retire on January the 2nd, you are in the next tax year. You have no options for putting more money in the previous year or looking at the numbers and finagling them at all. If you retire at the tail end of a year, then you can intelligently look at what's my income so far this year, what is my anticipated income for next year, and then looking at when you want income to fall. So little side note, but we try and give those tidbits when we can.
Sure.
Okay, so I want to skip one and go into another for a moment because we had already talked about it. So developing a personal relationship with your tax advisor. I don't want to delve too deeply into this because I think we actually already covered most of it.
Yeah. Hints at it.
Yeah, exactly. But the clients that I help the absolute best are my clients who I know what they've got going on. I know what type of people they are because I don't make decisions for my clients. I provide them context and information and recommendations while they make the best decisions for them and for their family. The people my clients who I know really well, I'm much more strong in my recommendations
Sure.
because I know what outcomes they're going to be able to have, and I know them personally, and so I know what outcomes they will be the happiest with. Because there's always they say there's always three sides to a story: my side, your side, and the truth, right? And so it's because I don't know everything about their situation.
Of course.
I can't necessarily give them all of the appropriate context because there's some added nuanced layer to the question that they're asking me that they haven't actually communicated.
Right.
And that changes the game a whole bunch, right? So it's so difficult that relationship between a tax advisor and a taxpayer is in my opinion very important because I give you better advice the more I know about you as a person. And I'm not talking about going out for drinks or anything like that. I'm just talking about working with one person over a consistent period of time, and being able to have that history together so that you can make better decisions.
Agreed.
Cool.
Nothing bad to that, truly.
Okay. So why don't we move on to then the point that we skipped?
Okay.
As far as
what we're going to add on the point of this, so I'll do my part.
yes,
It's my turn.
yep.
So
Charlie's passionate about this one.
one of the ones that I really wanted to add was, and looking for an advisor, someone that you would want to work with, is what is it that they require of you? And so I have seen a lot of someone bring a prior tax return, a firm, when they require you to provide basically the whole tax return prepared already to them. And so if you've got to sit down and go through and fill out 15 pages of information to give to them, that's one thing. I have a biased opinion. It probably came through a little bit there, but that would be one thing.
We're in the bias section, Charlie, so this is okay.
There are different layers in that, such as adding receipts. I'll be honest, I don't add your receipts. You may come in with 6 or 7. Let's add these, no problem.
Yeah.
You bring in a shoebox. I'm going to do my absolute best to kindly and professionally tell you that you need to take this home and add these things up and bring them back in an organized fashion. That's just our firm.
Can I interject real quick? Okay. So the reasoning behind that is if you want to pay a firm to do your bookkeeping or your accounting, it's totally appropriate for you to provide that information and for that firm to then do all of the work of processing and reconciling all of that information. Totally appropriate. What Charlie is talking about is when you go to somebody to prepare your taxes and just give them a shoebox of all of this paperwork, you haven't paid them to do your bookkeeping or accounting. What you're paying them to do is your tax return. The burden of proof is on the taxpayer, which means the receipts and stuff like that, per federal law at least, are not required to be tracked by someone like us, right? Now, some tax preparation firms will require that they have proof in order to protect their company, right? So that they're not putting anything on the tax return that isn't true or that isn't legitimate, right?
Well, there will be some, just to give you some pushback on that, there will be some firms that when you drop off your tax return, that's what they expect.
Yeah.
I've gotten some feedback.
Yeah, that's what I'm saying.
Right. So, and we have our opinion,
right,
definitely, on the adding of receipts, the burden of proof is on you, but at the same time, there are going to be firms who, and it may meet someone's expectations or desires of I want to just drop the box on your doorstep, and you get to sort all this receipts and add everything and put that together because that's what I'm paying you for. Fine. That's the right advisor for you to try and look for. It's not us. That's the right one you'd want to look for.
Yeah. And then, beyond that is, of course, as with any issue, there's a little more complexity there, right? Because sure, I agree with what your take on this is and what your opinion on this is, as far as if they're requiring you to do 98% of the tax return, why are you going to see this person unless maybe they're giving you a lot of these other valuable things. But beyond that is also, what do they require of you in regards to scheduling appointments, in regards to payment, in regards to the window in which they're preparing the tax return, and the window in which you have time to give them updated information, and all that kind of stuff. And so again, it's just trying to work with somebody whose processes work for you and work with you. Okay, so beyond that, we're going to get to probably the most biased point that we have. And it honestly is for a very good reason. And that is in regards to your tax advisor, hiring a tax advisor who gives you good knowledge and information and education. So one of the things we talked about in our very first installment of this series is that the reason we started this podcast is because we are passionate about teaching people something new. Every single time people work with us, we guarantee that you will learn something new. And so we break the mold in that regard. And so it's difficult for us to tell our audience that you should be looking for a tax advisor who is education focused. That's difficult because, frankly, there aren't a tremendous amount of them out there. The industry and the type of people that this industry attracts, the joke is accountants, right, are stuffy and, push their glasses up. Oh, gosh. Sorry, I'm new to this. They're boring people. Sure. And I may have my boring aspects. I'm not saying I don't. But we feel like we break the mold in regards to being education focused. Hiring at Molen Associates is a pretty rigorous process because we're trying to find people who we believe can meet that expectation. Right. And it's not easy to find. And so, again, very biased from our end. But that's because we see the value and the workings of having a team that truly is education focused and willing to teach you new and helpful things that help you make better decisions as a taxpayer.
Agreed. I sort of, with this, it almost feels to us is that it's a natural component of the first three things we talked about. So if they're accurate and if they're honest, and if they have the appropriate expertise, I can teach you about these things. clearly I'm being accurate because I know what I'm talking about, or I can even show you, eyes on ink material for this. And I'm accurate with it. I have the expertise, and I'm honest with what these things are. No, your 47-year-old child does not count as for the child tax credit. Period. We can look at this.
Yeah,
this is easy.
I can pull up the book and I can show you where it's written.
Where the rules are.
Yeah, absolutely. And so from our perspective, being education focused is incredibly relevant and important in our job description, and it's something that we don't see often. And so the measure of this, and this is where it gets real sticky, real difficult, because if you're looking for a tax advisor, number one, it probably ought to be us if you jive with anything that we're saying, right? That's a bit of a hard sell. But if you're looking for a tax advisor, and even if it is us, whoever it is that you talk to, my recommendation is that you ask them some questions and listen to how they provide you the answer. Because if they give you the quick answer, you will get the quick answer the rest of the time you work with them. And the quick answer in the tax world is it's just not that simple. The IRS, when going to tax court, right, with the law on their side, lose about 50% of the time. Why? Why does the IRS lose 50% of the time in tax court?
Context matters.
Because the law is not sufficient. And so if you have a tax return preparer who is only following the law, then they are too small of a scope in regards to how they return or how they prepare tax returns. We use the law, we use precedent, we use commonly accepted norms within the industry, and
cases that Lars has lost.
Yep, absolutely.
Right.
So precedent, right?
Yep.
As well as research, right? Independent research. In those ways, and historical data, right?
Right.
So beyond just what other people are doing, we use our own individual firm's precedent and history in working with the IRS in order to make determinations and policies.
Right. It may expand, adding deductions. It may retract and take things away.
Yep.
And we've cut certain things out based on the experience.
Yeah, let's not talk in theoreticals. Let's talk in specifics.
Sure.
So there was it Pennsylvania or was it Massachusetts? It was either Pennsylvania or Massachusetts. It was about 10 years ago or so, 12 years ago. There was a court case in which a state trooper, I think it was Massachusetts actually, but there was a court case in which a state trooper, their state law required that their troopers eat in their vehicles. They were absolutely required. And so basically there was an audit and it went to tax court, and the courts ruled that this state trooper could take a $1,080 meal deduction each year. Okay, so this was ruled in tax court. That set precedent. So now for all of our law enforcement professionals who worked in patrol, we gave them a $1,080 meal deduction because we were relying on that court's precedent.
Right.
And then in an audit, we cited that precedent, and the IRS then went and looked into it and came back and basically said that the context was not the same. These troopers were required to eat in their car. Right. Our patrol officers were not. So then at that point, we lost that deduction one time, and after losing that deduction once in an audit, we removed it from our processes moving forward because we leaned on the precedent and we pushed the envelope as best we could to help our clients. And then once we lost in an audit, we said, okay, no, if this isn't going to fly, we're not going to put it on every single person's tax return if it's not going to work, right? And we never lost it again, but that's because we didn't continue taking it, and none of those other tax returns were audited. So we lost it once. But for hundreds of clients who we relied upon that precedent, we saved them an extra $300 every year for using it. And as soon as we lost it, we removed it. And so it's one of those areas where speaking about that specific scenario, I hope you'll understand some of the complexities there. It's not so simple as to yes, I can or no, I can't.
It's a fluid dynamic changing thing.
It's time to soapbox, Charlie. I haven't soapboxed it all yet today, and who knows, maybe this will be the first of many, but I think it might be the only one today. So I'm going to get on my soapbox here.
All day, you promise?
Oh no, not all day. I'm talking about for our session here. So I'm going to get on the soapbox for a moment because People view taxes, in general, they view taxes incorrectly. Most people view taxes like a light switch, right? It's either off or it's on. It's right or it's wrong, yes or no. And it just is not that simple. And so in the case of the trooper, right, and our patrol officers, using the precedent, we believed that there was a greater than 33% chance that the IRS would agree with our determination. And on all of those other hundreds and hundreds and frankly thousands, because we used this deduction for several years,
Sure.
thousands of law enforcement tax returns, clearly the IRS to some extent agreed. And for one of our clients who went through an audit, the IRS disagreed. And once we had one that they disagreed, now we can't believe that they have at least a 33% chance of agreeing with us, because in the one that was questioned,
Right.
the IRS disagreed. If any of you are statisticians out there, you can say that that's 100% of the questioned, tax returns. The IRS disagreed. 100% is greater than 33%. So, in that scenario, and the reason I use that 33% number is the IRS, the federal government, requires that we believe that the IRS would agree with us at least 33% of the time in order for us to meet our due diligence requirements. So kind of wrapping up the soapbox, generally people view the way that our tax system works incorrectly because they don't recognize the complexities and that the very common, overused, but almost always right answer of it depends, right? So it depends. If you ask me a question and my answer is not it depends, then it either is a straightforward question, right? Like Charlie was referencing the child tax credit for a 47-year-old. A 47-year-old does not qualify for the child tax credit because the child tax credit expires the year that your dependent turns 17. That is very straightforward. There is no it depends. It expires the year your child turns 17, period. There are plenty of those within the tax code. But by and large, most questions that are asked have to be answered with it depends, because I need to know context. So, okay, I'm stepping off my soapbox. Appreciate your indulgence,
Sure.
Charlie.
Sure.
But now let's jump into the antithesis, if you will, of what you should look for.
Big word.
Oh gosh.
Wow.
Well, I'm wearing glasses now, Charlie. So
I'm sorry. A wise one.
my IQ went up a couple points, I
There
think,
you
when I
go.
put them on.
I like it.
Let's see. I feel dumber already. Okay, jumping into the antithesis of what to look for is, of course, what are the red flags, right? What do you need to absolutely stay away from? If you see it, it should instantly turn you off from using that advisor.
Or at least cause you to ask more questions.
That's fair. Yeah.
Right.
So what do you think? You got any opinions on this?
So I think our first one is pay by refund. So if you
What do you mean?
So pay by refund would be I go see a professional for them to prepare my tax return, and they give me an option. Hey, you happen to have a $3,000 refund. I can either have you pay X amount of dollars as you leave today, or you can pay nothing and we'll just take our fee from your refund. You'll get the whatever is left over. That is a very innocently appealing and attractive thing, especially for those who aren't in a capacity to fork over $100 or more to have their tax return done, sometimes much more. And so it ends up getting a lot of positive connotation in that, oh yeah, it's really easy to do that. And so we don't disagree with the fact that it's easy. We happen to have some insider information regarding that. The pay by refund type system, in order for that to happen, there are extra layers of rules and compliance and diligence that has to happen on the firm's side, which are tied to fees. Our opinion, very strong opinion, in that at the level of those fees are, what's your word?
Unconscionable.
I can't say that word.
Yes.
That.
So the issue here is, you might pay over $100 just for the service fee of having the tax firm take your refund, or take their payment from your refund.
Correct. So
there's also some deceptive practices that happen here, right? Of a pay by refund situation. How many fees can they hide in what you're paying them when they're just netting it out of your refund, as opposed to you receiving an invoice and paying and knowing upfront exactly what the fees are for your tax firm. So in an effort to meet some of these requirements, let's be upfront. Let's be honest. Let's be transparent. Right. Molen Associates' average fees for individual tax preparation, depending on the complexity of your tax return, is somewhere between $350 to $500. Right. Just to give you our listeners an idea.
Sure.
Of a firm like ours. Hopefully after seeing our work product over, our podcast work product
Sure.
over a couple of episodes here, you get an idea of the type of people that we are, of what we expect from ourselves as professionals, and what we do for our clients. And so that should give you some kind of idea of the price range of someone like us. Now, there aren't a whole lot like us. You've got a lot of professional CPA firms who have their entire staff are CPAs and who are doing accounting and bookkeeping, financial statements, and that kind of stuff. We are a tax preparation firm first and foremost, specializing in self-employed individuals. Because we specialize in self-employed individuals, we work a lot with business owners, which means we do a lot of bookkeeping and accounting and financial planning and that kind of stuff. But from our perspective, this pay by refund option is that the fees are unconscionable, and it removes transparency from you and the firm that you're paying to do the great work for you. We stand behind our prices, our work product, and everything. And these pay by refund practices have been so let me lump into this actually instead of just glossing over it. Let me lump into these the rapid refund programs, right?
Okay.
So a lot of this the rapid refund programs were in place. I don't know, they were very common 6-7 years ago. And that had to do with basically the tax firm would lend you the money from what was coming in on a refund. They would lend you the money.
So you have a refund immediately.
Mm-hmm. You would get it that same day, and the interest rates and the fees on those programs was insane.
Yeah.
I mean, it was really tremendous, worse than credit cards. Awful interest rates and fees. It was unreal. And so this is kind of one of those inherited areas from there that was seen as less bad as the rapid refunds, because really a lot of those rapid refunds have gone the way of all the earth, right? It's gone because the practices were deceptive and hurtful to the taxpayer, and the taxpayer advocate office and that kind of stuff, and the Office of Personnel Management, OPM, they came in and basically got rid of a bunch of that stuff. But the pay by refund does still exist, and we recommend that if that is offered to you, you think twice about who you're working with. Especially, it's
find
not
a way to pay by cash. I mean, pay it up front and save half the cost.
Yeah, and the thing is if they just say, hey, it's an option, that's not necessarily inherently bad. If they're saying, we think that you should do this, or this is our common practice, I immediately would question that. That doesn't mean that firm is bad, but it is on my list of red flags.
Technically have the option now too, and I've told it to 4 people, I don't know, and actively told them, eyeball to eyeball, you do not do this thing.
You should not do this, right? I literally use that word, which is why you said, hey, Kevin, what's that word, right? Because I use that word when I'm talking with my clients. The fees are unconscionable. I don't think that you should do this, but it is an option, right? So some people just want to, but honest. You should be honest.
Yes.
Okay. So next one. This whole topic is a soapbox. I mean, this whole thing is a soapbox.
Let me take it.
All right, Charlie, you take it.
So, on a tax return, when it is professionally prepared, there is a spot where the professional is listed. They have an associated number that is recognized by the IRS. You have to register and be acknowledged every single year. So the preparer is there, often the firm is there, and then that number is there. It's actually an important piece. It's something that is not commonly reviewed or looked at or anything of any importance other than the fact that it keeps them honest in their firm. There are rules for reasons. There's a reason it needs to be there. The ability to electronically file a tax return is somewhat tied to that. But the red flag, as it were, is if you were to go to a professional, have them prepare your tax return, and when you go to sign the tax return, what it says in that spot is self-prepared. So self-prepared means is that you did it on your own. What self-prepared also means is that they are not listing their name, their firm, and their associated number. It could have been that they were sanctioned by the IRS. It could have been that they're prohibited from filing tax returns professionally. There's a litany of reasons there. They don't want to have any burden of responsibility of their own.
It could be
because
that that's
they're
how
doing
they've
shady practices.
Yeah, it could be that that's how they've always done it. And so
Correct.
there's nothing shady behind it. But the problem is they're not putting their money where their mouth is, right?
Correct.
They're not putting skin in the game. They're not standing behind their work product.
Correct.
They're saying, hey, I just helped you figure this out.
Correct.
You just paid me to give you some advice while you handled
Right.
the filing of your own tax
You
return.
bought TurboTax, I came over to your house and sat next to you and said, yeah, I think you should do this. Sure, that's not prepared.
Yeah, absolutely. But these firms that churn out these self-prepared tax returns, that is absolutely 100% a red flag.
Correct.
If you've paid someone to produce your tax return and it says self-prepared, you should have that. You should bring that return to us and have us take a look. And you should not use that tax advisor. Big red flag. Okay, thanks for saving all of us from the soapbox, Charlie. Even though I think you kind of soapbox that yourself. Okay.
My own soapbox.
Beyond that is a little bit tied into this, a little bit, in that professional tax advisors have due diligence requirements. So the piece of the federal law basically that governs us is called Circular 230.
Sure.
Circular 230 is about 8 to 10 pages long. I don't think it's been updated, significantly, because we keep, up to date with that kind of stuff. But I don't think they've added any significant chunks to it this year or anything like that. But Circular 230 governs the federal government's treatment of us as tax advisors.
That's what 33% rule came from.
Yeah, exactly. The federal government and Circular 230 uses the legal verbiage that basically, or essentially, I can reasonably rely on the information provided to me by the taxpayer. And so it's that piece of Circular 230 that tells me I don't need your receipts, right? If I ask you a question and you answer that question, I can reasonably rely on your answer. And so all of that kind of stuff. The point is that Circular 230 requires that I ask you due diligence questions. If I'm not asking you questions, I am not meeting my federal, legal obligations as a paid preparer. And so if your tax advisor is just taking your information and preparing your tax return and then just providing you the paperwork and it's just a transaction and you're not talking to them and they're not asking you clarifying questions and they're not asking you about additional deductions that you may have,
Sure.
Are they just assuming that you know all of the appropriate deductions?
Right.
And that because you know them, you've provided it to them and that everything is appropriate? If I see a receipt for Home Depot, right, and it's got codes on the receipt and I don't know what it is that you're purchasing, and you work in real estate, I can reasonably assume, probably, that that's going to be something that's work related and deductible, right? Maybe it was a home gift that you purchased for one of your closings or
Right.
something like that.
Right.
But I can't know that. So if all you do is provide me with a receipt, that doesn't mean anything to me.
Right.
I need either a profit and loss statement from you. Again, just talking about this theoretical example of a realtor, right?
Yeah.
I need a profit and loss statement, or you need to go to molentax.com under resources, shameless plug, and select our checklists. So you can find our real estate checklist, or our law enforcement checklist, our online sales checklist, like, the Etsy store that you may operate and that kind of stuff. You can find, our producer, Clark, is a fitness instructor. And so, we've got a fitness checklist. We've got all kinds of stuff. We've got a ton of different resources there. You can go and use one of our checklists in order to kind of approximate what your deductions are and give us an idea of what you have, because that will get us to ask more questions. If you've got a tax advisor who is not asking you a single question, they're not meeting their due diligence requirements, and that's a huge red flag.
Even if you have all that preparation done, I meet with some folks who have been coming for years, and they have just beautiful profit and loss statement, all their backup,
Great
all
records.
the answers, everything.
Yeah.
I, in all honesty, could just blindly take their paper, push everything in, get their tax forms, and call it a day. But I'm going to take that profit and loss statement, and they've got a spot for meals. And I'm going to ask every single year, is it one of these three things involving the meals? Do you follow this? Is anything outside of this? No, it's the one of them. Okay, great.
So
ask about
because you hit on that, why don't you just mention real quick, what are the three things that you ask about those meals?
So the meals, the rules around the meals was it paid to, I call it underlings, right? Paid to employees or staff. If it was not paid to, if it was provided to in the context of work has to be conducted. It can't just be, I gave it to the office, it was a meeting or something like that, coordination type deal. If it was done with a client or a buyer or a vendor type deal, you're trying to gain or increase or maintain
Like networking.
business type of deal. Or if you're physically out of town. Houston is a giant town, so if anyone's familiar with it, there's the Woodlands and there's NASA. It's all still Houston, okay? You can drive an hour and a half, still counts as Houston. You leave the metropolitan type area, you go to Galveston, another city over, you're out of town conducting business. So one of those, you're physically out of town, underlings, or working with buyer type deal. And so if it's the categories, then you're great.
Yeah.
If it doesn't, I was just, I worked 16 hours this day and I was on site and I bought food for myself. I'm sorry, you're a contractor and I follow your logic. It doesn't work.
Doesn't fly. Yeah, absolutely. Okay, great. Thanks for adding that one in there. So I think that covers our red flags, right? So to sum up, so let me just kind of recap what it was that we're talking about. What you want to be looking for with a tax advisor is someone who is accurate, who has expertise in your area, someone who is honest, at least with you. We think from a bias standpoint that you ought to be looking for someone who meets your expectations and meets their expectations and deadlines and such, someone who's available, someone who is requiring the right things from you, who is willing to develop a personal relationship with you, and who spends time answering questions and providing you education. The red flags are pay by refund if they put self-prepared on the tax return and aren't willing to put their name on their product, or they're not asking you questions or not enough questions. So hopefully that gives you some value when looking at what advisor to pick. Spoiler alert, we meet every single one of those qualifications. So if you're looking for a really fantastic tax advisor, please reach out to us and let us know. We'd be happy to help you. Other than that, I think we do have just a little bit of time for questions today, maybe just one question for today.
I've got a good one for you today. So the question for the comfort zone is, if I have a business and take payments in cash, do I still need to pay taxes on that money?
All right. So let's dive into this because I'm going to take you word for word there, right? What you said is, do I need to? The answer to that is unequivocally yes. Per federal law, the IRS requires that you claim every dollar of income that you receive, right?
Credit card, PayPal, check, cash.
Doesn't matter how you get it, right?
And there's rules around bartering too, technically.
Yep,
So
yep. We're not going to dive into that one.
No, we're not.
But there's going to be a time where we're going to have that conversation, but that's kind of a lengthy one. So to answer this question, actually, the quick answer is yes. Now, remember, I told you, if all you get is the quick answer, that's a problem. So I'm not going to just leave you with the quick answer, but the quick answer is yes, you need to claim the income. And in an audit, one of the very first things the IRS is going to do is look at your bank statements, right? And so what people generally want to do is they want to see this group of income as this is not taxable. It's cash. It's not taxable.
I got cash from my pocket, never hit the bank. There's no record. There's no anything.
Yeah.
How would they ever know?
So it's not taxable, right, Charlie?
Of course, absolutely not. This is, if you're not watching video, I got the scrunched face and there's absolute sarcasm dripping from me.
Yep. So of course, it is taxable. Now, the other question, which was not actually asked, but it was inferred, is if I don't claim this income, can the IRS find out? The answer to that probably is no. But we don't advise clients on illegal tax avoidance, right? And so I'm not going to dive into answering that inferred question more than I already have. But the quick answer is if you've got business income, that income is taxable, regardless of whether it's cash or not. I will tell you that if the IRS audits a business and that business doesn't show any cash income at all, I guarantee they're going to throw out deductions. They're going to try and add additional income. They're going to do everything they can because they know that you received cash. To some degree, you received cash. It's like the waiter who doesn't report any tips on their tax return, right? If it's not shown anywhere, they know a waiter is receiving tips. They know they are.
Agreed.
Any
Nothing
extra thoughts on that?
Extra on that? No, you did it very well.
Fantastic. I'm pretty good at what I do.
Yes,
breaking news. Okay. All right. Well, then I think that wraps up Comfort Zone. If you're still with us, thanks for sticking through with a longer episode today. If you can't tell, Charlie and I are both really passionate about this subject. We think that we provide a tremendous amount of value to our clients. And if you can find someone like us because you're not in the greater Houston area and prefer to meet someone face-to-face, fantastic. I hope this helps you find somebody. If you're struggling finding somebody like this, that's not a surprise to us. It's not super common in the industry. We would love to work with you. You can find us at molentax.com. And beyond that, we hope you'll join us for the next episode. Thanks so much for watching and listening.
Thanks for tuning in to this episode of Questioning Your Sense. If you haven't done so already, be sure to subscribe to this podcast, leave us a 5-star review, and don't forget to share it with a friend. If you would like to submit a question for our review on this podcast, feel free to email us at info@molentax.com.